thing that really has me worried and is crucial as relates to this sort of silent support to the economy from the wealth effect, and just in general, the economy itself, is housing and what's going on there. And we're clearly seeing real softening in the housing market. And, even in areas that are little bubbles, like the two places that I spend my life, which I would say are really bubble economies. What's happening is that listings, I actually had dinner with a friend of mine who's a real estate broker out here last night, and he was saying the number of listings has increased 50% in the last month. And while prices, exactly, they went, huge increase, but prices haven't yet come down because things are just sitting. And this is a market where there's no urgency. There aren't distressed sellers who need to sell necessarily. So they're just sitting there. And the same, as relates to where I am out on the East Coast in Southern Florida, where that market, we were also seeing an increase in listings and things just sitting longer on the market. But when you go into sort of the real world outside of these little highly, inflated bubble universes in which I seem to function, the situation on the ground is really looking pretty bad. You're seeing a huge increase in cancellations, and I think it was 1 in 7 or something housing contracts were just walked away from in April. I'm waiting to see the May numbers, which come out any day now. And that obviously the home builder survey last month, went back down to its COVID lows. You've seen a lot of weakness in the home sales data relative to what it should be doing this time of the year, which is seasonally when it really should be doing quite.
While Wall Street celebrates resilience, Stephanie Pomboy is warning that the U.S. housing market may be quietly cracking beneath the surface. According to Stephanie Pomboy, listings are surging, homes are sitting unsold, and buyers are increasingly walking away from contracts. She argues this isn't a healthy pause. It's a warning sign that the so-called wealth effect supporting the economy could be fading fast. If housing weakens further, Stephanie Pomboy believes consumer confidence and spending could follow right behind it.
Well, and this all comes back, of course, to what happens to interest rates. People are locked in because of the mortgage rate situation. And so, again, this becomes a question. If the Fed cuts, do mortgage rates go down? And if so, how much? And is it enough to really alleviate that? And if it is enough, does that actually lead to deflation in home prices? Because suddenly, people are able to move, so you get even more supply on the market. People have an ability to sell and relocate. So, all big questions, but there's a lot of uncertainty as relates to the biggest asset for most households out there, which certainly isn't going to be helping their confidence and, by extension, their spending, one presumes.
So you're absolutely right, Steph. Headline I saw right before we hopped on here, U.S. new home sales, their month-over-month change just came in at negative 13.7%. That was forecast at negative 6%. So basically more than double. Previously, it was plus 11%. We are continuing to see lots and lots of weakness there. Now, I've had a number of housing analysts on this channel recently who have been echoing all this. Stephanie, to your point about cancellations, I think the last time you brought that data point up, I asked you if that was just for new homes or existing. And I think you thought it was for both, but you weren't sure. I did confirm with Melody, right, that it is for both.
Okay.
So we're seeing cancellations in both of those markets there.
Yeah,
I think it's very telling. I'm a little shocked, actually. So it's a very bifurcated housing market right now. You've got regions like the Northeast that have had less inventory than, of course, the Sunshine States where all the development happened. And so, right now we're seeing, weakness in some areas and relative strength in others. But Steph, you live in probably what should be the most strong place right now. Right?
Yeah.
An area that doesn't have a lot of room available for development. It's, ground central for everybody who's fleeing states like mine, states like New York.
Yeah.
In fact, the New York election yesterday, I think, just
Oh
gave
my,
a lot
yes.
of new people reasons to consider moving to Florida.
Yep.
You've got, the White House South just a stone's throw away.
Yep.
So if there's a place that would be experiencing uncommonly high demand right now, it would be there. And you're saying that listings there are going up.
Yeah, listings are going up and things are just sitting longer. There's no urgency on the part of buyers to buy. I am just, just wiping my brow that I sold my house, before this happened. I mean, it was just luck in terms of the timing, but I would hate to be sitting there trying to sell right now because the market is definitely slowed down materially. So we'll see. But, I think this interest rate question is really going to be quite interesting to watch if and when the Fed does cut rates. And I think the odds are pretty strong that they cut. I mean, maybe not in July, but we'll see rate cuts this year. How does it affect the mortgage market? That's going to be really fascinating to watch, and the Treasury market in general, because of course the only reason Trump really cares about Powell cutting rates is that he imagines it's going to reduce the deficit by bringing in the interest expense. And I would say that's very much of an open question. So we'll see.
Well, and you could do that, but then the question is if the housing market is rolling over and the economy is rolling over, tax receipts might go down by more than the savings you get on the national interest and the debt, right?
Yep.
So
Stephanie Pomboy says the real housing problem isn't mortgage rates anymore. It's home prices that still haven't fully broken. According to Stephanie Pomboy, America may be heading into a dangerous housing reset. She argues that years of massive construction, combined with homeowners finally selling once rates fall, could flood the market with supply. Stephanie Pomboy warns that if home prices start falling nationwide, the damage could spread fast, because housing is the biggest asset most Americans own. Adding rising student loan pressure, growing debt stress, and more people borrowing against home equity just to survive, and Stephanie Pomboy says this could become a serious threat to the U.S. economy.
Yeah, so first off, I want to give myself a slight little pat in the back here. I've been saying for a number of years that supply is coming. I was stealing that line from Game of Thrones. And I think we can now say in probably a frighteningly large percentage of markets, supply is now here. Right, and that's the big issue. And most of the housing folks I've been talking to, Stephanie, share your view there, that it really isn't a story of mortgage rates. It is a story of prices. Like basically, prices have to come down.
Right.
And they also share your thought that, I mean, first off, how much is the Fed going to have to cut to really bring mortgage relief to folks? A lot. Right, and it's only going to cut that much if the economy is really starting to show signs of struggling. Right. And then also they share your thought that as rates start to go down, you're going to have some of these, locked in homeowners start to bolt, right? And so, that's going to add additional supply, and B, so it's not going to provide the relief that a lot of people think that lower rates might, at least not for some probably pretty long transitionary period here. So we've got, I think, two really big things just to make sure we highlight for folks. We've got weakness in the housing market, which, as you said, Steph, is on average the largest asset that most Americans have, right? So there's a big negative wealth effect if that price starts going down. Then we have these student loans, which are compromising people's ability to pay their mortgages, to pay their rent, to pay their auto loans. So make the argument for me, if you can, why we shouldn't be worried about this.
Well, I can't make that argument. I mean, the one thing I was going to say is that in addition to everything you just mentioned, where there was this idea that we had a shortage of housing, but we also have this construction boom that's been going on. I mean, certainly in where I live, there are cranes everywhere, but all over. And if you look at, I was just trying to pull up the chart, I had it here, housing under construction, there's more housing under construction now than there was at the peak of the housing bubble in 2005 in terms of total number of units. So this idea that we had some shortage of housing, well, give it a minute, because when all that stuff under construction gets completed and moves onto the market, we're going to have a glut of housing, not a shortage. And then combine that with what you're saying and the possibility that lower rates allow more supply to come on. It just adds fuel to the fire. So, I mean, I think this is an important thing to watch. We'll see how it unfolds, but clearly, the idea that you could see on top of everything else, a deceleration in nationwide home prices would be really, really problematic for the economy, just because here we've got consumers who are already delinquent on their bills at the highest rate since the back end of the Great Recession. And then all of a sudden, their biggest asset is deflating. And presumably, and I think it's true, they haven't levered up, they haven't extracted that phantom equity to the degree that they did during the housing bubble, but we are seeing some increase in home equity cash outs, which I think, that just happened in the first quarter, I think is interesting in terms of its timing, that it coincides almost precisely with the resumption of the student loan payment. So
do you see that as a sign of a weakening household balance sheet? Like, I need to borrow from over here because I got to pay more over there.
That's my sense, but because you're not seeing it reflected in the spending data. So it would seem to me that they're just trying to figure out ways to service this debt at this point.
All right. I want to ask you about the latest spending data, if we have any updates there. Real quick, just on inventory, I want to note that, first off, record construction.
Stephanie Pomboy says the housing market is sending a warning sign nobody wants to talk about. New home sales just collapsed far worse than expected, listings are rising even in high-demand Florida, and buyers are freezing up. According to Stephanie Pomboy, if the Fed cuts rates, it may not save housing. Lower rates could actually unleash more supply as locked-in homeowners finally sell. And if home prices weaken, consumer confidence and spending could crack next.
Right. So people might think, well, they'll just put those projects on hold, if there's no buyers. And it's like, no, a half-built house has zero value to a home builder. They got to finish it and get whatever they can for it. So all of that stuff is going to make its way through the pipeline, whether the market wants it or not. Secondly, there's a whole bunch of other potential sellers this time around that we haven't had in previous cycles. Whether it's the corporate, the institutional investor, whether it's the army of small short-term rental owners that all jumped in, during COVID because it was going to make them passive, millionaires, and now they're realizing this thing is making me a passive pauper because it's taking money out of my pocket every month. So you could have, and I think we're already starting to, but we'll have I think good odds we'll have a increased surge in distressed, desperate selling from a lot of those players too, because it's not the roof over their head.
Yeah, absolutely. And I think you're starting to see that. I thought I had read some articles about some of these big institutional players trying to liquidate some of those holdings. And that would obviously be a huge deal if it began to broaden out. And, clearly you're seeing issues related to CRE on the bank balance sheets continue. So this situation is not getting better. Let's not fool ourselves. It's just slowly getting worse every day because there's no relief from the interest rate front, which is what everybody's been waiting for.